Welcome back to another video. Today I'll be talking about the Spider Gold Trust. I'll be explaining how gold can be, a great hedge against inflation, what my personal thoughts about gold are, and whether or not I'll be buying this trust. So, Spider Gold Trust is around 1.132 up today. Year to date, it is up 2.5%. It is around break even for the year and is up around 285% since inception in 2004. However, one thing to notice is that it is heavily underperforming all indexes including Dow, IWM, S&P, and the Nasdaq. So what makes this interesting is that many individuals believe that gold is a great tool against inflation. However, that's not necessarily true. In a book by Ben Graham, The Intelligent Investor, he explained during the 10 times of inflationary period for 4 years in the United States, gold has gone up only 5 times, making a 50-50 probability on whether gold goes up during the period of inflation. So inflation does not directly mean that gold will go up. However, it can be somewhat of an indicator to protect your assets against volatility in the stock market. So rather you invest in gold. So let's talk about the Spider Gold Trust specifically. It is the largest gold reserve in the world and was one of the top 10 largest ETFs up until 2014 when the S&P QQQ started outperforming them like crazy. So if you look in the regulatory filings, essentially describe what they do. So essentially in a vault, they have around 1,013 tones or 32,572 ounces of gold locked away. So the value of gold stock or the Spider Gold Trust is impacted directly on the spot price of gold. If the spot price of gold goes higher, GLD will proceed to go higher. If the spot price of gold goes down, it will follow suit. So it is almost like holding gold directly. One big advantage of holding gold stock or the Spider Gold Trust is that you are not paying too much of a premium. I believe the only premium you're paying is the 0.75 or 0.6 expense ratio. However, when you buy gold, actually you pay upwards of 15% spot price because of the limited edition. For example, I wanted to buy silver today. However, it was above $3 to $4 above spot price, making a 15 to 20% markup on spot price, which is not very good because it eats into your profits. So if you look at their gold trust prospectus, we can see their whole documentation and whether or not they're secure. They also talk about gold supply and demand. But the most interesting thing I found on page 19 was that demand was lowering while supply was increasing over time. And the way supply increases is through mine production. So one thing that many people say is that gold is a finite resource. It is finite, however, in the earth we have not even found 20% of all gold estimated to be on the upper surface of the earth. And with demand slowing down, it may be interesting to see what happens to gold spot prices. However, gold spot prices have increased even though demand has decreased. So how do we understand gold? So gold is probably one of the most complex assets. Even though it's one simple metal, it is extremely difficult to understand what gold is. Because gold by itself holds no value. You're not buying a business, you're just buying a piece of metal. However, that has many merits to it. Gold can be used in semiconductors, it can be used in jewelry, it can be used in heat conduction, it can be used in all sorts of electronics. But unlike a business where you can have some valuations, it is extremely difficult. And gold is mainly determined by a currency value. If currency devalues all of a sudden, it should mean that gold will tend to go up for that short period of time. However, that is not true in the long run. For example, the dollar has lost 95% of its value in the past 100 years, while gold has not increased, the inverse of 95%. It has only gone up, say, around 15x, while it should have gone up, 9,500%. So it is very difficult to, have a direct value on gold. One way you can, have an indicator is by, the spot price issue. When you go to a jeweler, they say, hey, you can only buy gold, but you can only buy it at, 20 to 30% premium. And that's when you know that, gold is in demand. However, that does not always translate to, the equation of gold getting at higher spot prices. It is very difficult to understand gold. I've been researching gold for a couple of years now. However, I do think right now is a great time to buy gold. I think with the upcoming inflation, it may be a good bet to have gold, maybe 5% of your portfolio in gold. Or what I would do is that I would probably buy 20% out gold options for the next year. You can find them very cheaply. Maybe pay like $1 or $2 of premium. And then if it does hit 20%, you would be rewarded with 7 to 8x returns on that initial $100 or $200 investment. So personally, I like gold. I do see a technical breakout happening. I do think gold is undervalued. I see a lot of commodities like oil, exploding to the upside. I saw oil above $85 today per barrel. I'm seeing silver up explode to the upside. I'm seeing uranium up 400%. I do think gold is a very hard asset to judge, but personally, I think it's a buy for me. I hold gold shares myself, the Spider Gold Trust, and I will look into buying more options. Thank you for watching and have a great day.